website. Yeah, welcome all. So today is what we have decided to be Alpha Learners Day, and today is 28th October. So this is date is arrived based on certain events that you will be aware in the coming time as well. So let's begin. Let me first tell me about myself to the people who are not aware of it. My name is Puneet, and I'm residing in Bangalore. I am a passionate investor relying on fundamentals plus technical. Vision to see, courage to buy, and patience to hold. That's what I try to do. And that's what alpha is about. If you want to make alpha returns, you have to understand these three lines very well. You should be able to see the company where it is going. You should have the courage to buy when people are not buying it. And then you should have a patience to hold when it is just flying. You will make a lot of alpha from that itself. I remain invested 90% to 99% most of the time. Be it 2016 issues in macro front, be it 2018-19 small cap crash, be it COVID crash, be it October 2021 market peaks, be it Russia-Ukraine, or be it Israel-Hamas right now. I generally remain invested more than 99%. And over the years, I have seen this. Remaining invested for a long period of time, you will not miss the good days. Good days mean just like yesterday. Yesterday, portfolio almost recovered everything what we lost in last 2-3 days. So once we get out of the market, we'll not be able to recover that money if we miss the good days. How many good days comes in a year? Not more than 15 actually. Which 15? You will not be able to figure it out. And that's why I'm saying you should be having a patience to hold during that time. About Alpha Affairs, my mission is to bring financial freedom for retail investors. And my vision is to have that mindset change in investors about investing. I am doing it through two ways. One is through my website, alphaaffairs.com, where I put daily snippets which subconsciously prepare you, and some dots are formed in your mind, which will later on will be connected with the different information. Another is through Alpha Mentorship Program, where we try to teach about the psychology, behavior, ratios, valuations, balance sheet, technical charts. And most of the things will merge together actually. It will take 2-3 years to reach that stage, and we should have patience to reach that stage actually. So we try to solve this puzzle even after the mentorship program gets closes in 5 months. Still people are associated for a longer period of time, where we try to solve it. We try to gain the experience through a collaborative effort. And this is what Alpha Learners Day is about today. So it's a road less traveled. That's what some of the retail investors have dared to choose this point of time. And this event is created to support them in their journey, to make them more confident about doing it themselves, to make them believe they can crack the market's code, to make them realize they can stand with the big giants of the market. If you get that confidence once, you need only one stock to crack that for you. Once you crack that, right, your life will be different. Many of you have realized it already, or most of you would come into that stage with time, but definitely it will change your life for forever. We are starting with today, 28th October, and as more and more people join, we will, or we might make it more regular in terms of Alpha Learners Day. Today's agenda, I have already shared in the group as well, but just to have a brief, I'm just putting an address in the starting for the 10 minutes to brief you about all these things. Plus, we were starting with Saurabh on a railways sector, and then as the time flows, other people will start presenting. There are some audience lucky draw as well, where we will ask the questions to the audience from the presentations. So if you are able to hear the presentation very attentively, you might win some prizes out of it. So there are 3 such kind of lucky draws, 2 questions, and you need to answer both the questions correctly. It has to be fastest finger first, but first you understand the question, then you should answer. Okay, that's how the things will flow. And we have a best presenter award also. Fair audience will choose who has best represented the theme or the sector or the stock or the way of presentation or the conviction he has. You will choose. So there is a gift voucher for the best presenter as well. So let's appreciate all those who are presenting today. Let's wish them success and keep the discussion to the point. We can be critical about the points being shared, but let's not be rude to the people. Let's be on time after the breaks. So there are sufficient and relevant breaks in between for you to have lunch or tea, but be on time, be back on time. And the other point is to be on silent while not asking questions so that we can go as smoothly as possible. Format is decided as 30 minutes for each presentation. 20 minutes we'll have a buzzer, and then 5 minutes the presenter can spill over. Questions to be asked at the end of a presentation. Please don't try to interrupt in between so that that 20 minutes will be lost basically otherwise. So we'll give you sufficient time in the end, but you can put the questions in the chat if you want during that time. Apart from 5 or 10 minutes, whatever time you will get as an audience to ask questions, further questions we can take in the chat box and the author will respond back to you even after his presentation or her presentation is finished. While during the other presentations are going on, he can answer your questions in the chat itself. So that is another way to interact there. So audience time I have already shared. You have to do fastest fingers first whenever the quiz comes, and how it works and what are the prizes basically. So you have some books coming up for you related to investing only. Okay, so be very, very sure that you want to win it. So we'll look forward to the questions and the presentations as we move forward. And best of luck to all the participants. And I hope we will be able to repeat this day very soon in the coming time. So I will stop sharing and I will hand over the presentation to the first participant, basically, Saurabh Jain.
Puneet, this is Ramarao.
Yeah. Yes, sir.
Just to start this session with a smile, I have a question.
Yes, sure. Go ahead.
So is it, Puneet, also eligible for Best Performance Award?
No, I am not.
Okay. Okay, that's it.
Yeah.
Hey, Puneet, were you sharing something? I did not see anything on the screen.
What about others? They were able to see, I think.
Yeah.
Oh my God.
Okay.
Hello.
Yeah, Saurabh.
Puneet, hi. Can I take over?
Yes.
Yes. Good morning, everyone. My name is Saurabh Jain. Can I get a confirmation if you can see the presentation?
Yes.
Yes. Okay, great. So, just to give you a brief background about myself, so that you can understand where I am coming from. And so my name is Saurabh Jain. I am currently a full-time trader and investor. Uh, in the past, I have worked in sales and marketing and finance. So I have a broad understanding of businesses. And I have also worked as an entrepreneur. So again, that brings a different perspective to understand businesses. And I hope, and this has, all this background has tremendously helped me in my investing journey so far. And for the last 4 5 years, I have been successfully able to outperform, the small cap indices. Uh, and I would like to share my investment framework today with you, along with a company that will, you know, uh, this is basically to give you an understanding of my investment framework and the company. This is in no ways a buy or a sell recommendation. Uh, as a disclosure, I am invested in this company, and I may or may not hold it for a long time. So, please do your own due diligence before investing. Uh, am I audible?
Yes, go ahead, Saurabh. We are able to
Oh,
listen.
great. Okay. So today's agenda for the presentation is, first I'll talk briefly about the company HBL Power Systems. Then I'll take you through my investment framework, which is very easy actually. And then I'll talk about how HBL fits into this framework. We'll also briefly touch about the valuations, because as you are aware that small and mid caps have done fantastically in last 6 months, and so we need to understand, is it a good time to buy? Uh, I use both fundamentals as well as technical charts. So I'll also take you through charts of HBL. Uh, so let's briefly touch my investment framework. Uh, it's actually, as I said, very easy. It is more of a back of envelope approach. And I wasn't really sure earlier about using this approach, but when I heard Monish Pabrai, who is a very famous and successful investor based out of US, he talks about keeping investments very simple, and so that gave me a lot of confidence that my approach is right. And so usually I don't use too much of Excel sheets or projections while taking investment decisions. Uh, so uh, so this is my, so then I'll talk about HBL. Then the concepts that I use, the first one is product market fit. I'll talk about all of these going forward. Then there's TAM stands for total addressable market. Right to win, or less competition. This is another framework that I use extensively. Then I also check for presence of mutual funds and marquee investors, because that gives an added layer of confidence that these guys have done a basic due diligence on the company, and are also, and it gives a confirmation of my thesis on the company. This is a preferred factor for me to invest, but not a mandatory one. Then I look about for tailwinds in the company. Uh, yeah, and then let me take you through the presentation, and I'll discuss each of these points as we go through. So to introduce, HBL Power Systems is based out of Hyderabad. It is a manufacturing company with a strong emphasis and strength in R&D. It is a niche manufacturing company which caters to electronics for railways, electronics for defense. It makes specialized batteries. These batteries go into EV, defense sector, data centers, and again it is working on other products for electric vehicles. So let's talk about the products. So the products this company works in can be divided into three parts actually. I'm sorry for the numbering. I'm not sure why the numbers are not appearing correctly. But the business can be divided into three parts. First is the legacy business, the business that they have been doing for 10, 20 years, which I call legacy business. These HBL started manufacturing batteries, and these are not normal lead acid batteries that are available, in the market. These are specialized batteries, nickel, cadmium, and other batteries that go into, they supply to specialized applications, especially into railways and defense. So, for example, as you can read, for these batteries go in torpedoes, submarines, aircrafts, missiles, telecom sector, oil and gas, and railways. This is their bread and butter legacy business that they have been doing so far. But and now they have introduced more products, and this I call new businesses. One of them is Kavach is basically, it is also known as TCAS, Train Collision Avoidance System. It's an electronic system that helps in preventing train accidents. So when I talk about Kavach, for example, around in June of this year, there was a train accident in Orissa, and which obviously, unfortunately, a lot of people lost their lives, and there was a lot of damage to the investments in the train infrastructure. And this accident could have been avoided if Kavach was installed. So the way the Kavach works is it is installed on the rail. There's some component that is installed on the railway tracks. There's another component that is installed on the train, and there's another component, communication component, that is installed on the tower and routers. So this is a very innovative product. Uh, this needs to be installed across the length and breadth of the country, which means we are talking about 70,000 kilometers approximately of railway tracks. This system is so far not installed in India except for a very small segment or route. But the advanced countries have this system installed. Now, one very interesting thing about Kavach is that in Europe, if we have to import a Kavach system, TCAS system from Europe, it costs around 2 crores per kilometer. And the in India, the railway has a research organization called RDSO. RDSO has developed its own vendors, and HBL is one of them, that has been able to supply this system at one fourth or one fifth of the cost. So we are talking about much lower cost than importing the system from Europe. The other new business that HBL is working on is a train management system. Again, this was earlier being imported from Europe. There was no Indian vendor, and HBL is the only vendor that has installed the first train management system, indigenous train management system in eastern zone of the country. Uh, then Kavach, some of the movies, I think Uri and Shahenshah, if I am confused, one of these two, the soldiers were using, night vision glasses, and those night vision glasses were made by Tonbo. And so Tonbo is a defense company that works in optoelectronics, and HBL has taken a stake into this company, has invested into this company, and has a tie-up with this company for manufacturing surveillance devices using optoelectronics. So recently, they have invested in setting up a factory. So they will be making all these defense surveillance systems for Tonbo imaging as well. And the another interesting new business is batteries, because HBL has been making batteries for a long time, and their batteries have been supplied to data centers. And as per government's data bill, all these social media and online companies and e-commerce companies need to set up have to maintain the data in India, within the geography of India, and so there's a huge boom in data centers that is coming up. So what I love about this company is it has gone into areas where there's a lot of emphasis and lot of tailwinds. And the third sector is future business. Even these businesses are futuristic, but companies again working on other futuristic businesses. So one is EV for EV vehicles. So EV vehicles, they will make EV motors, electronics, and batteries, and they will focus on e-trucks. And they are also working on fuses for missiles and grenades. So essentially, in summary, very futuristic products with a great demand, catering mainly to railways and defense. So let's talk about this concept called product market fit. It is not typically used in investing circles, but as I have been an entrepreneur and a businessman, uh, so it is mainly used in those circles, product market fit, but it is very relevant for investing as well. Product market fit means that you are making a product that which has a demand. So for example, to be in simple terms, there are a lot of legacy companies. They're still trying to make what they know, and then they're trying to sell them. Even then, the market has shifted, or the customer demand or taste of has is shifting, but they continue making all those same products where they understand. They are not diversifying into something where the market where the market demand is. So HBL has diversified from batteries to Kavach and many more products. So and the way they have done it is very interesting. They first try to identify what are the gaps. So they are very conscious about this product market fit. They want to they first understood where the gaps, what are the requirements. They identified that the railways need to implement a Kavach system. There's no supplier in India. They have to import it. The import cost is very high, and given that they are essentially an engineering company, they developed this on their own. So now they don't have to go out and do a lot of sales. The demand is already there, and they have the product ready now. So one way they go about is import replacement in technology led products. So what this is from their I think one of their presentations. Most Indian companies rely on foreign technical collaborations, but foreign companies are unwilling to do technology transfer and offer at very high prices. So their effort is to replace these products with indigenous products at a much lower cost. And how do we? So everyone talk. So even if we talk about how do you ascertain that there is actually a product market fit? A good product market fit will ensure that there is growth in the company. If the company is not able to grow, then there is something missing. That demand is not there for product, or there are too many players and they are not able to extract a good premium on their product. So in this case, if you look at the left side, the compounded sales growth of the company is not great. It has been growing very slowly. So uh, and this is because their legacy business, which was the batteries, was having a very slow growth. But if you look on the right side, their profit growth uh, has been phenomenal. They are growing at 30-40% kind of CAGR on the profit side. This means that they are shifting their focus to products where they can command a premium, where there is a demand, and not too many players competing in this area. Another concept other than product market fit is TAM, which is total addressable market. So the way I look at investments is I look for companies that are operating in areas where the demand is going to be huge, and there's an opportunity to grow manifold. I'm not interested in looking at companies that can grow double or three times their size, but much
Saurabh,
much bigger.
Saurabh, can you share the
Yeah.
screen again? It got lost. It get lost in between. So can you share the
Okay.
screen again?
Okay. Visible now?
Yes.
Okay, great. Yeah. So the total addressable market for this company is, I would say, humongous. It's not it's not large. It's humongous because it is working in areas of defense, electric vehicles, and data centers, all of which have received a lot of government focus today, and there's a lot of emphasis for developing projects in this area. So if you talk about defense, everyone knows the defense story. It is already playing out. We are trying to replace the imports and make in India, and not just replace imports. We are trying to position ourselves as exporters of defense equipment. So that's a huge market opportunity. Electric vehicles. Uh, the way I look at electrical vehicles is what we have. The current stock of vehicles on the roads. It has been All these auto companies have been able to sell those vehicles over several decades. Now, over next few years, these all of these vehicles need to be replaced, and there will be additional new growth of vehicles, which is anyways happening today. So we are talking about a huge auto industry that is available to tap through electric vehicles, and the data centers. So again, the data bill of Government of India has a focus on storing data in India by social media and other online companies, and there's a lot of data centers that are coming up in India. So this company uh, is working in all the areas which has a large TAM and a lot of tailwinds. So briefly, uh, the company, this is from the company, this slide is from the company. They have identified what were the traditional low growth areas, what are the established growth areas, emerging growth. They are talking about Kavach, train monitoring system, defense, Tonbo imaging, grenades, electronic fuses, and after 25, they are again talking about EVs. To give you a glimpse of size of Kavach, just one product, the market opportunity is 13 times the current sales of the company. Yeah, and this is just one product, and we're talking about many more products for defense and other industries. Uh, Also, the life of these systems that they will supply, the opportunity is 20,000 crore over next 10 years. But after 15 years, again these electronic systems will have to be replaced. So that gives them an additional opportunity. It's not that the opportunity will be over after 10 years. It will keep coming there. It will keep generating business for them, and uh, these electronic systems will also generate maintenance revenues for them. So if you look at a snapshot from their balance sheet, P&L, profit and loss account, if you look just above the arrow, from we can see there is a continuous increase in revenues from electronics business. So this is not, so this validates or corroborates what the company is saying. It is not just saying that we will do it. We can see this playing out. The revenues have increased by 3 times in 3 quarters, from 26 crores to 80 crores, 3 times in 3 quarters in the electronic segment. This is the projection given by company. They are talking about increasing sales by 2x and EBITDA by 3x. If you look on the top right side, you're talking about increasing sales by 2x and EBITDA by 3x in 3 years. Now, what my personal assessment of this company is, they are technocrats. They are not very savvy in sales, and this slide may be conservative. They can do much more, but uh, if you read this line on top of this table, it says there is many a slip between the cup and the lip. The company and the promoters themselves are saying that, these projections may be ambitious and there may be slips, but the way I read it is, the promoters and the company is a very genuine company. They are not building false hopes in the minds of the investors, and that's the reason they have given disclaimer. Uh, it The projections may or may not happen, but I think they will happen. I'll tell you the reason why going forward. But I would like to draw your attention to this quote of Vijay Kedia, sir. It says that, he said that management of small companies themselves don't know how big they can become. And in this context, I think these projections by company might be conservative. I'm not, I won't know, but my estimate is that these estimates might be conservative, and the company can do even much more better. So I talked about the total addressable market. I talked about product market fit. Another concept that framework that I like to use for investments is right to win, because there may be a huge demand for, say, a product like, say, mobiles, but that does not mean that a mobile manufacturing company will grow fast or gain market share. So company should have something different, so that it will ensure its success. I call this right to win. In case of Kavach, uh, by HBL, there are only 3 approved players so far. Uh, there are more players working on this, but the approval, which is the approval from railway body RDSO, it is not easy and it takes a lot of time. This product has been developed by HBL and others working with railways over a 10-year period. The product development started around 2011. The product got approved in 2022. So HBL and the other two players have entrenched themselves in railways, and railway, they have got approval. Won't be easier and quicker for other players to do this. So far, most of the orders have been backed by HBL. That again corroborates that they have the right to win and they are well positioned. And this is from the presentation of HBL. HBL market position in India is number one or number two in all products they work in, except telecom tower batteries, where it is number three. Uh, these are the basic checks. In due to lack of time, I won't get into details, but what I want to highlight is their interest coverage ratio is less than 20, is more than 20. That means they have very low debt, and they'll be able to sufficient easily make all their interest repayments on time, even if there is a slowdown. So we don't need to worry about company going bankrupt or other similar issues. the comp I the, and then I want to understand if the company is friendly to minority shareholders, or they're just make interested in making money for themselves, or are they lying about their profits? Are their balance sheets and P&L fair uh, and depict the real picture of the company? So the company has been consistently paying dividends more than 12% of their profits, which means a company won't pay dividend if there are no real profits in the company. So that establishes that the profits are real in the company and these are not, the balance sheets are healthy. They have been consistently paying tax at the rate of 25% and above. Again, no company would pay tax if they are not really making money. Their cash flow from operations is more than the PAT. So that means that every rupee of profits that they generate, they are able to generate equal or more cash in the company. So that means that there are no accounting or sales recognition related anomalies in the company. And the promoters have been increasing stake over several quarters. So a promoter would only increase a stake in his company if he thinks that the future is brighter. So all these things, the points mentioned in the slide are to establish, or the points that I use to establish that the promoters are genuine, and there's no hanky panky business in the company, in the balance sheets. So I look at institutional interest in the company. So far there have not been any mutual funds present in the company. Uh, so when a mutual fund or a large investor enters in it, it gives me a comfort that my thesis is right. So recently in September last month, there were 30 institutional investors who met the company, and we all know that institutional investors will only meet a company if they're the interest in the company. So some of the noteworthy investors in these are Ashish Kacholia, Param Capital, Kotak Mutual Fund, and Incred Mutual Fund, and then there are a lot of other HNIs. Tailwind, another framework that I use for investing in companies. So if you look at April 2020, immediately after the COVID fall, I tweeted that GRSE is an amazing business. It has a cash of 2,800 crores, and the market cap is lower than the cash in the books of the company, 1,800 crores, and they even had order book full for next few years. In spite of this, till for another two years, company did not perform. So company pre-COVID fall was 2,600 crore market cap. Even after recovery from COVID till 22, the company was at similar level. Only when the tailwinds came in form of government interest and proclamations about focus on defense making in India and exporting to the world, this company became 4x in around a year's time. So tailwinds are very important. This company, which was available at market cap less than the cash in the books, and no one was interested in it, almost suddenly it became talk of the town once the tailwinds come in form of government interest. So all building companies have been one of the best performers after defense tailwinds. Hello, Puneet.
Yes, go ahead, go ahead.
Yeah.
We have 2, 3 more minutes, so we can
Okay. Yeah.
talk.
So this is the chart of HBL. As I said, the Kavach product has been under development for 10 years. So till 2000, you can see from 2000 to even till 2022 last year, this company was trading in a range. Only after in 2022, when the product was approved, and obviously the insiders would have known about the approval process in late 21. So from late 21, this company started, the stock price started going up, uh, and from 11 rupees to 300 rupees in 2 years has been a phenomenal performance. I did not know about this company. I got to know about this company when in June of this year, when the train accident happened in Orissa. Next day, the stock opened gap up because there's a probability that the Kavach implementation will be expedited, giving tailwind to the company and the Kavach product. So I entered around here, around 125 in June of this year, and the stock has gone vertically up from 125 to 300 rupees in a matter of 5 6 months. So the idea here is tailwinds. Tailwinds are very very important. Any excellent company can, the stock price may not go anywhere unless tailwinds are there, or it may compound slowly. But once tailwinds kick in, the stock price movement can be exponential. So this is another framework that I look for. This is the weekly time frame of HBL. Let us delve into charts briefly. So this is weekly charts of HBL. It is forming what we call as pole and flag pattern in technical analysis terms, which is a very very bullish pattern. If there's a breakout, if the price goes above its all time high, then it has the potential to go even higher as per charts. This is the daily time frame, and this in this recent fall in last week, the stock found support at its 50-day moving average. 50-day moving average typically acts as a strong support for strong stocks. So there are a lot of stocks that would have fallen below this, and they might be weak, indicating lack of interest from investors. But this stock has stayed strong, which means that there's still interest from investors. This does not in any way guarantees that the stock will not fall below this point, but as of now, it indicates there is a support. So I think last one or two slides, the valuations. A lot of people, a lot of my friends look at the valuation and tell me that the P is 58, it is expensive. And my view is that P, trailing P of past profits is not relevant. Trailing P is relevant for companies that are growing consistently at a fixed 10, 15, 20% kind of a growth rate. It is not relevant for companies which are going through an exponential growth phase. For such companies, forward PE is more relevant. And as per my broad working, as I said, I don't use too much of Excel. The company says that they will triple the EBITDA. So accordingly, the forward PE is roughly around 20, which is a reasonable. It is in no ways cheap, uh, but it is a reasonable PE. Stock may or may not correct. Uh, so for fundamental investors, you need to study this company. You need to, if you are convinced with your self study, you need to accumulate this on falls or during consolidation. Also, the lot of their business is depending on government contracts, and the payments may be lumpy. So there might be some quarters where the results may not be may be good. That may lead to fall, and that may be the opportunity to accumulate these shares if you are convinced about this. The final slide on risk. It's a Hyderabad case based company. My personal bias and a lot of other investors believe in this, that the promoters there, are not very clean. Sometimes, not all, obviously, but sometimes there have been higher incidences of promoters not being clean, like Satyam. They are very ambitious. They take a lot of debt, and I've worked with such companies when I was in job. But in this case, what gives me comfort is that debt equity is zero point 0.1 and interest coverage is 20, and they haven't taken a lot of debt, which puts them in a separate category, like unlike some of the Hyderabad-based promoters. This is in no way an offense to anyone. It is just my observation and experience. Uh, there are risks related to order flow slowdown, because a lot of this is dependent on government orders from defense and railways, and there may be delays or the orders may be lumpy. So that is kind of a risk. Uh, but you need to understand that Kavach has to be implemented. So sooner or later it will be implemented. Even it may get delayed, it will be implemented. Ability to scale up, these are technocrats. They are not sales savvy people. So one point that I don't like about this company is they were into very niche space in batteries for defense, and the scale up so far has been very slow in the past. Not so far, I'm talking about before Kavach was or electronics was introduced. The battery business, the scale up was very slow. So I would like to track the pace of growth going forward in this company. And the other risk is related to price. There has been a very fast run up in stock price and valuation, and there may be some profit booking. Uh, Thank you. The last point, I would like to acknowledge this Twitter ID Sandeep. If you are interested in knowing more about the company, he tweets a lot about various companies, and HBL is one of them. Uh, so this has been my presentation. Thank you so much for your time. I look forward to your questions. Thank
Yeah,
you.
thanks, Saurabh, for a wonderful presentation. So, guys, you can ask the questions. So,
Saurabh, this is Ramarao.
Yes, sir.
Is it a monopoly or there's a competition in the market in this
So
products?
as I said, sir, as I said, there are multiple products they are working on. But the main product as of now, which is ready, is Kavach, and it is not a monopoly, but there are only 3 approved players. So it's a limited competition.
and to answer that question further, I think the technology they have evolved. Other two players are leveraging the technology from HBL to make those products.
Puneet, Yogesh this side. Just a thought. See here, the advantage of this and the risk lies into the same. I am not sure on how much Kavach will be, spearheaded in Indian railway networks. Do you see any risk on Kavach itself? Because when this Bhubaneswar accident happened, there was, sounds around, Kavach might not have, prevented this. It was, altogether a different signaling cause. So, do you think relying only on HBL for Kavach makes sense?
Okay, so I think the idea here is not only banking upon the Kavach part. There are other technologies also. Some other companies they are also acquiring in defense side as well. So they have multiple segments. One of them other is industrial batteries also as well. So lot of other spaces. Kavach is what is driving the tailwind at this point of time. But as you see the picture in the screen, there are other products in different domains. So each year they are targeting some segment which can lead the growth. So it's an overall business. You cannot just rely on one segment to propel the gains out of it. I think the Kavach gains already has been established into the market price right now.
Right, right.
We can take one or two more questions. So we'll start with Ganesh first, based on the hands.
Okay, so are they having some kind of a business in any other countries also? I mean, do they have some markets outside India also?
So, sir, they have 2 subsidiaries, one in Germany and one in US. and I'm not sure what proportion of business comes from those companies, but they do export batteries, special application batteries to multiple countries.
Okay.
Okay.
So,
So
for
the
example, there is export to Israel for defense batteries.
okay. Next question is from Annika Premkumar Nair. You can unmute yourself. Okay, maybe we have lost that person for the question. Any other questions? Okay,
Hello.
yeah, Anika, go ahead.
Hi. I just wanted to know, see, this is basically they are catering more to the government. So wouldn't their, payments be a little skewed sometimes because government payments are never on time?
Yeah, so you are right. That is a problem. So they have a longer cycle to collect payments. But if, as you can see from, let me open screener quickly. Sorry, I'm 1 second.
That's fine. You can answer immediately, and then maybe.
So basically, if you look at this, uh, they have been collecting their profit and loss. For example, last 3 years, if you look at the net profit, 14 crore, 94 crore, 98 crore. As against this, their collection has cash from operations has been much higher. So they are able to collect all the sales that they are doing. So far in last 10-12 years, that has not been a problem.
And to answer further on that part, yes, payments from government could be a problem, but on the other hand, they would not be a bad, basically, in terms of some of the companies have to write off the payment cycle, right? In this case, write-offs will not happen, only the delay part will happen, and that should impact the cash flow from operations. So as long as the interest coverage ratios are high and the company is able to manage the operations, I think even a small delay here and there, they should be able to manage. That's the broad idea.
Also, Puneet, in government, we are talking about railway. Railways has a separate budget, and railway payments are not so delayed as lot of other departments
But
of
still, when
government.
people have to think in terms of evaluating a different companies, right, out of which
Yeah.
two they have to
Yeah.
invest, this would be a
Yeah.
negative part out of that, possibly. Yeah. So I think, yeah, we can stop it here. Other questions we can take in the chat, and then we can go further. Okay, so
All right.
Saurabh, you can go to the chat and answer some of the questions from your side, which are relevant to your presentation. In the meantime, we can start with the next one.
Good
All right.
insights, Saurabh. Thanks.
Thank you so much, everyone.
Thank you. So we go to the next participant, Sheetal. Sheetal, you are able to hear me, and can you share
Yes.
your?
Yeah.
So Saurabh, you can stop sharing, or Sheetal, you can take it over further.
Yeah. Can you see my screen?
Not yet at this point. It is coming up, looks like. Saurabh, can you stop sharing your screen?
I think I have stopped sharing.
Okay, I have stopped it. So Sheetal, can you just do it again?
Yeah. Can you see? Can you see it now?
Yes, we can see it now. Yeah, you can go ahead. So you could just go to the top first slide and then start.
Yeah. So good morning. Welcome one and all. My name is Sheetal. Just a little bit of background about myself. I've been working in the communication and PR industry for almost about 8 to 10 years now. I was earlier with Brandcom, currently known as Madison. I am a novice into this market, but this is purely out of my interest. We look at various sectors and try to learn a little more about them. The focus on today's presentation is to try and give you an idea about this particular industry, how it is going to be faring in future, and see if we can further deep dive and take a couple of calls going forward. So with that, I'd just like to start with this. Just in case if I tell you, if I give you words like acidity, tannin, grapes, what kind of thought process comes into your mind? Hello?
Yeah, guys, you can answer, I think.
Alcohol.
Lifestyle products.
Great. You're close.
Can you repeat the question, please?
Grapes, acidity.
If I say grapes, acidity, lifestyle, sun, sand, what is it
Wine.
Sula
that comes
Vineyards.
into your
Wine.
mind?
Wine.
Sula Vineyards.
Yeah, I
Perfect.
think Mitesh has
There
answered
you
it,
go.
right?
This
Yeah.
is wine.
A distillery.
Okay, so you nailed it. Great. So today we are talking about a particular company who is into this wine business. I am just going to give you a quick snapshot of what they are doing and why they are what they are today, and why do you think we need to look at this sector?
Okay, so
So
you can, Sheetal, you can go to the first slide. I think we are looking from the bottom side. From first slide, if you can go up.
I'm on the first slide right now.
Okay. So other guys are able to see it?
No, I'm able to see the last 39th.
Picture, right? The first slide is the picture. That's right. Is it right?
Yes.
Yeah.
Can you see this now? There's
I'm
a
looking,
dark screen.
no, we are looking at 39th number, I think.
Oh, yeah, yeah.
Yes.
Correct, correct. It is showing
It is
39th
39.
So
slide.
on the left hand side, you can pull the this scroll upside.
One second. 1 minute.
Yes, now it is visible.
Can you see it now?
Yes, go ahead.
Great. So again, thank you one and all for all your time today. So we are starting with this company known as Sula Vineyards. I'm just going to quickly take you through what this company does. Okay, so briefly, I'm going to take you through what the company does, their overall business snapshot, and a little bit about their financial health. So Sula Vineyards has been an India's leading winemaker. Now they have their winery based in Maharashtra and Karnataka. Can you see the screen? If somebody is not
Yes.
able to see, please let me know.
Yeah, we are able to see.
Great. So without expanding too much, I'm just going to give you key highlights. Now they have close to 2,800 acres of vineyards, predominantly based out of Nashik, that's Maharashtra, and Bangalore. They have close to 16.7 million liters of winery capacity, which is supposed to be one of the largest winery capacity anywhere in India. Apart from that, they also are into sustainability. Most of their energy conservation happens through the internally generated electricity like solar power, which I'll take you through a little later. This is just a brief snapshot. The key thing is they have a whopping 60% market share in the current Indian market, which is not surpassed by any other player currently. Now, let's a little bit about like how they've started their journey. The founder of this company is Mr. Rajiv Samant, and he started this winery sometime around 1996. The first bottle of wine was manufactured in around 2000. Slowly, when he saw the demand for this product, he started building. So he just recognized, there is a different way. See, currently wine industry has got a lot of restrictions. So there is no advertising which can happen. So what he actually did was he built a beautiful wine tasting room in the Nashik winery around 2005. Then Fest. I'm sure most of you might have heard, it's It's a very famous festival, the year end, which happens in Nashik, which happens at their winery. Primarily gives you a snapshot in terms of what are the products being sold, gives you a little more, detail into what kind of wines they sell, how it's been manufactured and things like that. Then in the year 2012, they crossed almost 50% market share. 2016, they became the best-selling. One of their wines, known as Sula Shiraz, became one of the best-selling domestic grape wine. Now, successfully building their journey, they've also acquired another winery. And recently, in 2022, they got listed in the stock exchange at the price of around 361. So this is a quick snapshot of the kind of journey what they've undergone. Now, let's try and understand a little bit about, see, for us to be able to appreciate what he's doing, we need to understand the process of wine making. Now, wine making is a very tedious process. Usually the harvesting happens sometime around December to March. That is the period where the grape harvesting happens. And the stock has been carried forward for the next 12 to 18 months. Then comes your processing and harvesting, processing and fermentation. So all these grapes, primarily they've been separated to red and white and rose wine. So what they do is they segregate. Then later on, it is being sent for blending, where depending on the kind of wine that you do, they either add in carbon dioxide or, they let it ferment a little more. Then after that, it gets segregated into aging. Now, the several wines, as you're aware, might be aged close to about 5, 6 years, 7 years. Sometimes it might be around 90 days, etc. Post the aging, it goes into filtration, and then bottling and labeling, and then distribution. So this is pretty much the way it is. Now, why Nashik or Maharashtra is the wine capital of India is primarily because it's a very tropical region, which is ideally situated to manufacture grapes. So if you actually see most of the players in India, they have their vineyards either in and around Maharashtra or Bangalore or, somewhere close to Bijapur, etc. And few of them in Uttar Pradesh. So the reason is because these are ideally suited places for you to manufacture grapes. Now, the usual grapes which we normally consume, the Thompson grapes, those are not the ones which is usually used for wine manufacturing. They usually use a different form of grapes. Now, there are a variety of grapes which I'll kind of take you through in some time. Now, this is a nutshell about how you actually go through the manufacturing process. Now, coming back to a couple of products which Sula has got. Now, they've totally got about 56 products under their belt. Many of them, at least close to 21 products in the elite category, 13 in premium, and some of them in economy and popular. The key product which they've currently got, which is quite famous, is known as Rasa. Now, interestingly, Rasa is a combination of Rajiv Samant and Sulabha Samant, which is their mother's name. So Rasa is one of their premium selling, one of the elite selling wines currently, and they've got a wide variety of range going forward. Then comes your Source, which is again another premium selling wine, and Dindori, also another premium selling wine. They have also bought the India's first based Muscat-based sparkling wine. Now, they have a small plant in Muscat as well. So, they are trying to increase their presence there. And they have also got the first Muscat-based sparkling wine. Now, as you are aware, we cannot call the sparkling wines champagne, because champagne is a place which is in France, and any wine which is there produced in France, you can actually talk about it as champagne. The other wines are not supposed to be spoken as champagne, so you call them sparkling wines. Now, Dindori is another product. Again, they have a great, Reserve Shiraz, which is the highest selling wine with an MRP of 1,000 rupees. So these are few of the product ranges. And just recently, they launched Pinot Noir, which is again one of the fastest growing premium wines, just about last week or so. Then comes to the mid-range, which is known as Sula Classics. Now, this is primarily for people who are just into, who wants to get into first-time wine tasting. So they're able to understand and appreciate, the finesse of wines. These are basically fruit mixed and very easy to drink. Then they have something known as York wines. This is another kind of a thing, which is again, a different variety of grapes which they use. Again, for the first time wine drinker to be able to try and understand and appreciate the various wine categories they have. Now, that apart from the wine manufacturing, they have the other beautiful concept. Now, they have something known as wine tourism, which they were the pioneers to actually start in the market. So what they did was they have these beautiful resorts known as Beyond by Sula and Source at Sula, where they actually invite people. You can come have a look at the vineyard. They also taste the wine as well. So they're indirectly educating you in terms of various forms of wine. How it is. It is one way of creating consumer awareness, which is excellent. Now, if you actually notice, they had, in the last FY23, they had close to about 340,000 visitors to their vineyards, and they've done close to about 130,000 tastings as well, which is phenomenally a great number compared to, our Indian population and our Indian, our Indian mentality. Because wine is predominantly less than 1% consumed in the entire Indian market. Now, this is some of the snapshots I'd like to show you. Can you see this, please?
Yes, we are able to see.
Yeah. So this is the resort. This is Beyond by Sula on the left. And on the right is Domain by Sula, that is in Bangalore as well, where they've recently, in 2017, they again started wine tasting, primarily to educate the consumers about the finesse of wine and, how a first-time drinker has to, actually try and experience various kind of wines. This is primarily more on educational basis. The other one is Beyond Sula. So these are the various. Now, the next thing is they are present in, across geographies. If you could actually look at this, they are present in close to 25 states, also in 20 different countries. But the key thing is they are not focused more on exports, a predominantly India-focused market. That I'll come to it later in terms of as to why. They're also present in various union territories, etc. So this is basically their geographical spread. Now, if you actually look at, as you say, tell me who the people are behind the company. Rajiv Samant has got a rich history of, in the wine industry. Karan Vasani is again a great wine maker who's got a great reputation in the industry as well. And you have the other management key people who've got close to about, at least close to about 60 years of work experience, combined manpower experience in the industry. So a quick snapshot in terms of thing. So if you could actually look at this, so Sula is a market leader with 60% market share. Their EBITDA has been healthy for FY23. They've been growing at the rate of 29%. They are one of the India's best-selling red, white, rosé wine, sparkling wines. Then they have a huge winery capacity of 16.7 liters. They have close to 2,000 acres of vineyard, which is the largest by far. And their premium and elite category wines are the fast-selling ones. So this is just a snapshot about what they are. Now, coming back to industry, okay, this is about the company where, yes, they are good and so what. Now, coming back to industry, do they really have scope to go forward? So how do we look at this industry? Now, if you actually look at the overall alcobev market, now first let's understand what is alcobev market. Alcobev market comprises of three key players. That is, one is spirits, one is beer, and others, and wine. Now, if you see in India, mostly Indian market is dominated by the spirits and the beer categories, whereas wine is very minuscule in nature. It's hardly 1%. So even then also the top players in the beer and the spirits category occupy almost 80 and 80% of the market share. But the interesting point to note is the Alcobev market is likely to have a healthy growth of 7.3%. And especially the Asia Pacific pack is likely to grow. Currently it has got a CAGR of about 11%, 11.1. It's likely to go further. This is the overall thing about the Alcobev. But when you come to the Indian market, if you actually see, India is the third largest market in China after USA, where it's got close to 2.6 lakh crores in volumes, which is quite huge. The second thing is, Indian Alcobev market is likely to be at least estimated to be 3.6 lakh crores, which has got a huge potential going forward. So whenever we look at a particular company or an industry, we don't look at what it's done before. Yes, that's an important part, but we also look at what it can do for us going forward. Sorry. Now, coming back to, so that's about the alcohol beverage industry. Now, coming back to the global wine market. Now, see, if you actually see, Indian wine market share is very, very minuscule. It is just about 1% overall. Whereas the other market share is around almost about 47% and 39%. 47% is all the spirits and 39% is close to your the other beer makers and things like that. But if you actually see, there is a huge potential for this industry to grow at least close to about 6.2% CAGR in the next coming few years. So it's going to be quite a big industry, close to about 546 billion globally. Now, where do we stand in India? Now, if you actually look at India, the per capita consumption, which means a person who can consume alcohol, is less than 100 ml. Whereas if you which is, in other countries like Europe and all, the world average is close to 13%. So we have a huge scope there. In India, again, the Indian manufactured foreign liquors, they grew about 12.3, whereas the wine industry grew by 18%. So even though their share is very less, the value of growth is quite high. Now, going forward, they're likely to clock close to 20 to 25% growth. So in a nutshell, we have a huge potential. We have a great untapped market, which is yet to be tapped. And we can see, what it gives us in store. Now, why have we chosen this company? What are its strengths and weaknesses? Without taking in too much time, I'll quickly delve into it. Now, key strengths of this company is it's one of the listed wine companies in India. None of the other makers have been listed in the market. They have many firsts to credit. They have the largest acreage compared to any other player in the market. They have a great brand legacy. Today, wherever you go, even if a person is not drinking wine, if you tell them which wine, what is it that you would like to drink, he will say the first thing which comes into his mind is Sula. Then they are pioneers of innovation right from the stage of manufacturing till the execution or bottling. They have been they have had various forms of innovation. The key opportunities are obviously, there is a wide consumer base. If you actually notice, Indian population, the Indian working age population is close to 28%, whereas the world average is around 48. So there we see a huge potential. A lot of people will be getting qualified, to the forthcoming workforce. It's estimated close to about 10 million, people every year are going to be, going to the workforce thing. So which is their market primarily. And today, wine is not being marketed as, an alcoholic beverage. It's also marketed as a health drink. Now, and earlier, as in earlier, they had a lot of restrictions, but these days there are expanding distribution channels as well. Whereas you are able to get wine in the retail stores at some places, you're also allowed to open shops and then, sell wine as a separate category. Now, what are the key weaknesses or the key things that we need to look at? See, predominantly the wine industry is primarily controlled by the state policy and the excise policies. So every state has a different policy. Because they have to get a lot of revenue from this, the wine industry has not been put under GST. So they are only under the excise duty currently. So every state has an excise duty it charges. There are two things that we need to notice. You have a free pricing state and you have a non-free pricing state. Maharashtra and Karnataka are predominantly the free pricing states where the owner, you are able to set your own pricing, whereas the other states are pricing restricted. Now, industry also needs to look at various regulatory overhaul. They have to come up with, consumer-friendly policies or the industry-friendly policies for them to be able to take this on to the next level. There is no advertising ever whatsoever because FSSAI has got strict rules that no direct advertising allowed. So the wine tourism or educating people on wine is another form of, indirect advertisement is what we could call it as, to tap the consumer market. Now, what are the key threats? I don't really call it threats. I could call it as areas of opportunities, which one you can tackle. Climatic changes, obviously, this is not under our control. In case if there is, less monsoon, then you will have a problem. You have high operational costs because there's a huge moat there. Not anybody and everybody can enter into this market because a huge capital expenditure required and there's a lot of bureaucracy. Then there is an increased competition. Increased competition, see, there are a lot of people who want to get into this market. You have very small players in the market, but then nobody has been able to make such a great headway into this. So though it's not a great threat, but you still counter it as threat. Now coming back to, okay, so those were the SWOT. Now what are the growth drivers? Now what can give me growth and where do I see a red flag? Now, people, see, in India, people are becoming more and more urbanized. The working class people look for an increased lifestyle. So the wine consumption is mostly aspirational. So if you actually look at it currently, you cannot convert a whiskey drinker to a wine drinker. It's not very easy because they are stuck to their own products. But if you're a new first-time drinker, then it's easy for me to convert you to the wine drinking market. Now, that's the philosophy which works here, the aspirational drinkers. Then you have premiumization. People look for quality wines. People look for quality wines to consume these days. That's another thing. And COVID actually acted as a great lucky aspect of this because, home consumption of wine or home consumption of spirits took an increased order because people, now there is no taboo. I can just order wine and get it at home and drink. So that's the way it is. So that itself has given to multifold sales. Now, coming back to what are the red flags? See, wine promotion, there is a scheme in Maharashtra which says the wine industry promotion scheme. Now, what they say is if you have manufactured, if you have produced the wine in the Maharashtra state, if you have grown the grapes in the Maharashtra state, and if you are actually manufacturing it in the Maharashtra state, you don't have to pay the excise duty, but you have to pay a 10 rupees standard per liter. Now, this was the wine policy of Maharashtra. What happens is, in case if this is taken off, see, because government changes, usually a lot of policy changes happens. There's an election which is due, so anything could happen. So, in case if this changes, then there is a huge, then there is one of the impacts that we could possibly see. The other thing is the promoter holding, though it is doing well, the promoter holding is close to 26.27%, which we feel ideally the promoter holding should be high. Now, recently, one of the investors offloaded 12.56% stake, but that was actually known. The reason is because, recently the Sula got listed. It was an offer for sale. The other thing is with FTA with Australia. Now, what is happening is in India, imported liquor is, taxed close to about 150%. So foreign trade agreements will really help them. If you have a foreign trade agreement, your import duty is reduced to 100% currently, and then maybe 50% going forward in the next 10 years. So that being the case, FTA will, probably increase competition. New and new wines might come back to the market. The other thing what I see is the over concentration in Maharashtra and Karnataka, which might act as a deterrent to this. Yes, the production, the growth, everything is fine, but if you're actually, in fact, if you're actually looking at only these two markets, then there is a slight risk which is there. Now, coming back to what are the key trends. Now, people are looking at wine subscription boxes. That's another thing. So you have these various channels where you can subscribe. They give you a small tester wines and then, you can go ahead and try. That's one thing. Then, you obviously wine is known as a healthy drink and not as an alcoholic, quote unquote, consumption. Quick look at few of the competitors. Now, we don't necessarily call them competitors because their, competitive play is quite minuscule in nature. You have Grover Zampa, which is primarily Bangalore based, and they have a vineyard there. Then you have Rio Spritzer, which manufactures fruity drinks or fruity wines. Revelio is again another Nashik-based thing. Four Seasons was one amongst them, but they only do it for their own company, and they're not overly into the overall retail market. Then you have Sharoza Vineyards, which is again they have just started wine tourism. And Fratelli is another reasonably notable player in the market who's been in existence since almost about 1970s for that matter. But in spite of being there for such a long time, they've not been able to make a great headway in this market. See, the other competitors who I've listed are all from the Alco-Bev market. However, they don't really manufacture wines. In fact, Diageo, which had a wine portfolio, also recently sold it to somebody. So they also technically not in the wine play. So this is pretty much to sum up in terms of the competitors. So net, what we are trying to say is Sula Vineyard is one of the great, the biggest player in the market, followed by Fratelli, followed by Grover Zampa. If you actually even look at the acreage also, Fratelli has just got 240 acres and Grover Zampa has got 460. In fact, Fratelli has been one of the oldest players in the market. And when you talk about the gross sales of these players, also you can see Sula dominates as well. If you actually see the FY22 data, it's close to about 419 crores. Whereas if you actually compare the other two players, there's hardly any data available. Now, all this is about the company. All this is about, where they are placed in the market, etc. Now, let's look at slightly about their financials as well, because that's important. If you actually look at this, their revenue from operations has been stagnant from FY20 to 23. If you closely observe, because in FY20 it was 521 crores. It dipped in 21 and 22 because of COVID and other reasons. It's slowly come back to the pre-COVID levels right now. But what we can actually notice is, if you notice the EBITDA percentage, there is a comparative increase in the EBITDA percentage from almost 9.7 to 29.1%. Now, there can be only two reasons. If you have to increase revenue, either you increase the sales volume or you increase your margins. So Sula has been doing very well in terms of increasing margins on their products as well. If you actually notice your borrowings also, it is continuously getting reduced. So that clearly goes to say that financially they're becoming quite stable. Now, this is a quick snapshot of the Q2 revenues as well. In Q2, which just got closed in September, they've almost clocked a 22% growth year on year, which is quite impressive compared to the industry, compared to the challenges they're currently undergoing. And wine tourism, if you actually notice, they've close to 19% growth as well. What they've also done is they've added more rooms in their vineyards, wherein you can. They've started from 67 rooms till they've gone to about 100 rooms right now. A recent change has been, Abhishek Kapoor has been added as a new CFO. That's one of the changes. So what the takeaway is, we can see a healthy growth going forward, and we still have 2 more quarters to left. Coming back to the financial performance, if we actually notice, though their revenue has been stagnant for the last 4 years, their gross profit margin has comparatively increased. It's close to about 66.7%. Their EBITDA is excellent, which is 29.1%. When I say excellent, I'm talking about only from this industry perspective. Their PAT margin is close to 15.2%. They have a healthy ROC, which is maintained, which is close to 23%. And they have an ROE, which is 15.8. Now, these are all okay. What about their leverage ratio? That is also quite healthy. They have about, a debt to equity ratio of about 0.4 and a debt to EBITDA of 1.2. The other key thing to notice here is there has been a recent increase of FII stake in this company. If you actually notice from June to September, I hope you're able to see this chart. June to September, the FIIs have increased the stake from 6.78% to 20.61%, which is quite huge from quarter on quarter. And the DIIs have almost increased from 10.23 to 17%. So this goes to say that this industry has got quite a lot of potential. So there is something which is brewing up in this company where we get to see in future years. Now, if you actually look at their business segment split, where is the money coming from, even though their revenues are stagnant? See, they are playing on this play called premiumization or optimization of premiumization, where what is happening is their own brands, which is the own brands are contributing to 86.9% of the revenue. And the third-party brands are very minuscule in nature. Then if you also go back to their own brands revenue by categories, the premium brands have been contributing to 72% of their overall portfolio, whereas the economy and popular is 27.17% only. So the takeaway here is they're focusing more on the premium and the elite brands, so the margins could be increased, and they're slightly slowing down on the economy and the popular variation just to remain in the market. So this is just a snapshot of how much each of these brands have contributed to their portfolio. So elite, if you actually see 23.9%. Actually, if you see the popular and economy, they're slightly going down. So they're not that much. But if you actually see the elite and premium, there is a quite an amount of growth there.
Sheetal, you have 5 more minutes. Okay.
Yeah. See, yeah, I'll just take 5 more minutes. So to overall say, their revenue has been healthy. They've been growing 22% year on year. Their EBITDA margins have been healthy. Then their EPS growth is almost close to 50%. Now, wine tourism, which is another key area, has grown almost about 30% year on year. Their own brands, if you actually see, they've grown close to 26%, which is constituting 87% of revenue. So clearly, there is a huge scope there. So this is all about the company. Now, if you actually look at how they're reducing cost, they've installed 2 million megawatt solar capacity, wherein most of their energy is self-sustainable. So they are saving hugely on the the energy cost. That is one thing. Second thing is their wineries, the vineyards are situated close to the water table, which is Ganganagar Dam. So the water is not a problem for them. Also, the rainwater harvesting is where they are actually, focusing on. They have close to about 36.8 million liters of storage capacity, and they've reduced the water usage per case by close to 11%. Now, why this is important is because these are the ones which can reduce the cost for you, actually. So you reduce cost and you increase your margins. Second thing is 96% of their packaging is reusable and made locally. And they are also using lightweight bottles. So these are the attention to details. So they are closely looking at every step of manufacturing, processing, distribution to reduce costs. Again, a few things from the management perspective as to how they would like to grow this brand is primarily they are focusing on wine tourism to educate the consumers. Also, current market share is around 1% in India. They would like to hope to get it to 2% in the next volume growth in the upcoming years, which is quite healthy, from their perspective. Also, most of this revenue which is there comes from their free pricing states. So the focus is also to penetrate to the other states right now. Now, if you actually see, we actually went into this place to see how things are. These are the actual snapshots of the location. One interesting thing to notice is the resorts are not being, built by them. They have partners who will build it for them. So it is basically on the revenue sharing basis. So there is no capex investment there. That also contributes to their margin. The other interesting thing, if you notice in this picture, is most of their wines are aged in the oak barrel. Now, this is a key thing because the red wines, you have something known as a tannin. Now, the microalgae which are there in this barrel will mix with the red grapes and gives you a very specific flavor. Now, nobody in the current industry has been able to take on this kind of a play in the market, which acts as one of the key USPs for them. And the water reservoir, which is again the water supply area for them, that's another key source. So that's pretty much about the company. Now, coming back to technicals, if you actually see, obviously, for the last few days, the markets have been going haywire. Again, it is not okay. It is fairly, it listed around 361. Currently, it's at 457. It is slightly consolidating currently. So probably we'll need to look at another 1 or 2 quarters to observe to see where it goes and take a call. Even the RSI and MACD does not give us, the confidence to buy it at the current levels though. But yes, going forward, it's got a huge potential. So one can kind of wait and watch and probably, at a very staggered pace. Should we buy or buy? Our thing is currently valued PE. Its PE is around 42. So it's currently fairly valued. You can probably look at, 1 or 2 quarters and, observe, probably add this onto your tracking stock. But the industry per se has got a great growth in the coming years. And moving forward, we presume that it's going to give us healthy returns. Again, you need to know your why, whether you want to be a camel in this race or whether you want to be a horse. You're looking at short term or you're looking at long term. And that's from my end. Thank you so much for your time. We are open to questions.
Yeah, thanks a lot, Sheetalji. It definitely gives me a good view personally as well on this industry. I've ignored till this point of time, but definitely I would look more deeply. So we'll have some questions from one is for Pankaj. You can start and then Veena-ji can ask the next question. Yeah, Pankaj.
Yes, please.
Pankaj. Okay, then we can move to Veena-ji. Yeah.
It was a very good presentation, Sheetalji. Are they related? They are related to the
Hi.
Pawar family?
Yeah. Is it related to what? I'm sorry.
The Pawar family, Sharad Pawar.
Hello.
Are they politically connected? Like,
I'm sorry, I don't know that information.
okay, no problem.
See, they are supposed to be politically connected, but they are connected to Pawar family. I am not sure.
No, actually, it was on my radar for the last 1 year. I just thought, Pawar may use it as
Right.
to convert their black money to white. That was my thought process when I first looked at it.
I am not very sure. It would be wrong on my part to provide you with wrong information. I see if you have to be in this industry, you need to have some amount of political clout. Otherwise, you can't reach where you are today. I'm sure every vineyard person or every, the person who started with winery has some or the other political connections without which you cannot reach. That is there for sure. Whether he is connected to Mr. Pawar, I am sorry, I have no idea, but I can certainly try to, now that you've told me, I can certainly try and look that out for you.
Sure, thank you.
Thank
So
you.
next question is from Ganesh.
Yes, Ganesh, please go ahead.
Yeah, nice presentation, Sheetalji. So,
Thank you.
yeah, one thing which comes in my mind is, see, when you see as a product line, they actually have only one product. Okay, it's more like wine, and it's not a matured market in India. So any industry, something like that, where they are actually having only one or two line of products, where it is not completely matured, we actually see a green FIIs and DIIs. But is there any other takeaway where we can look into other industries also, where they have only one or two products in the complete portfolio, and how it will be seen in the market? Can we get some kind of takeaways from this?
That's a very good question, Ganeshji. I'll try to answer it this way. See, predominantly what we're looking at is currently the market is very, very nascent in India, not only for their products, but overall as wine industry. So today, if you actually ask, people are not aware various categories of wine, or leave alone, the finesse of wines. So India as a market has a huge potential, which is what they will need to tap in. Now, the kind of product lineup which they have, I think that will suffice them easily for the next 15 to 20 years. Now, this is what I could gather from the management talk or the people who we had spoken to at the background, that, so we were in fact asking them, are you willing to, probably extending a few more. In fact, they've recently launched Pinot Nova, that is another form of red wine in the market as well. Slowly, they are increasing brands. They are catering to various categories, but what they want to look at is, while at one end they're educating consumers by introducing various forms of wine, they also would like to move up the value category. So to answer your question, the current brands which they have should suffice their requirement for the going number of years, because India is, as you rightly mentioned, it's a very untapped market. I hope I've been able to do justice to your question.
Yeah.
Yeah, Pankaj.
Yeah, Sheetal ma'am, I have one question.
Yes,
because
please.
I'm basically from Nasik, so I used
Call
to
me
visit this
Sheetal,
place.
Pankaj, that's fine.
Yeah, Sheetal, actually, I used to visit a lot since 2005, 2006 onwards to this place.
Great.
So my simple question, I know that you have gone through more in detail about this company. Did you came across anything about Sula Feast? Is there any commentary from the promoter on the Sula Feast? Because as I know, before 2020, they used to have this as a multinational events. A lot of foreigners are coming to this place, and it's like amazing. If you visit that place, you don't feel like you're in India.
Yes.
So did they mention anything about Sula Feast as an event?
Yes, they will be rolling out Sula Fest in the coming year. I don't know whether it's going to happen this year or probably next year too. The reason is they are very careful. See, because the wine industry, as I earlier mentioned, they have a lot of restrictions, and because of this COVID and COVID reoccurrence, there was huge restriction on the industry. So they had stopped this for some time. Probably going forward next year, you should be able to see the Sula Fest again going back, because that has got a huge potential. That is where they see that, the Q3 and the Q4 is where, when they mention that their sales are going to increase, this is what they're looking at. This is also another form of creating awareness. So that is what do you say, probably a pearl in the glass. So I'm sure they will not miss it out. But they have not really mentioned anything right now. But we understand they are going forward. You might be having the fest in the coming year.
I think, in 2024, I don't see any announcement or anywhere in the social media. So I think most likely they will do, if they wanted to do, by February 25. So, they will miss all those numbers.
could be a possibility. I don't have a clarity on this as of now, but
Okay.
actually the Sula Fest will not, yes, of course, it forms some amount of their revenue, but may not be a significant part of their revenue as of now. Because I'm sure if they have thought through that, they will also have a backup plan as to how to mitigate that.
Yeah, because it will be like gateway to promote your brand and create awareness,
Absolutely.
social media and all.
Absolutely. But the amount of sales which might happen there, if you actually noticed, in fact, they clocked a huge visitor on, I think, October 1st or 3rd, if I'm not wrong.
Yes.
So what they could have established during Sula Fest, they've already established during the visitors. So they also have an alternate, plan B to take it forward. So I'm sure they will not let their sales be affected because the Sula Fest is not happening. But yes, if it happens, it's an icing on the cake.
Yeah. And did you have any idea like how much is the corporate events as well as destination weddings happening at Sula Vineyard? How much they contribute as a part of revenue?
See, in the wine tourism industry, currently they do have 2 resorts.
Yeah.
They have close to about 40 to 42% contributions from the events which are happening.
Okay. No, this is just the curious questions from my side.
Absolutely, you're most welcome. It's a learning curve for us as well.
Thank you.
Okay, so we'll stop it here in interest of
Sorry,
time. But
Puneet, can I have? I just missed. What is the reason for Sula Fest not happening? I missed that. Sorry.
See, because the COVID and the pre-COVID levels, there were a lot of restrictions. So they are slightly getting back on track right now. I am not sure if it's going to happen or not, because definitely this year it may not happen, because if it had to happen, they would have communicated it by now. For whatsoever reasons best known to them, they are not doing it this year. They might come back with that next year, because recently they've also done a lot of capex expansion as well in their company. That could be one of the reasons why they are stalling this. And they're also looking consciously at tapping the other unpenetrated markets as well. So to probably counter that, they might not be having it this year. It's morely to do with restrictions, and also the elections are in process. In 2024, you're likely to have elections. So the permissions and all are not easy to, get by, because various government changes and there are a lot of, political play in places. So that being the case, it's one of the reasons why they might not be having. I don't know whether they will have it in FY24 end. I'm not sure about that.
And just one thing, Sheetal, see, almost
Yes,
40 to 45% of their PAT is contributed by this Maharashtra VAT subsidy scheme. And
yes,
during the IPO time also, there was an article that this VAT subsidy scheme may go away. Although there is
yes.
lack of clarity whether there is a sunset date or not on that particular thing. Management also keeps saying that they presume that this VAT subsidy scheme over a period of time will go away and they will try. So some color on that particular front, what are you gathering over
okay,
there?
Yeah, that's
so
a very good question.
Sheetal, can I
Actually,
answer that actually? So for the
yes,
first part,
please.
you can add on later. So the one point, Himanshu, here is some things which are maybe dark clouds for the business, be it this company or be it any other company, there could be some dark clouds, and it's better to be aware of that. And in this case, yes, those subsidies are those dark clouds. But when we are thinking of understanding a business, I always think of in terms of longevity. Can it sustain for 10 years? Is the trend growing? What is the mega trend for this industry or a company? Will that dark cloud will impact in the longer run or not? So what I feel by this presentation at my side also, and Sheetalji can correct me, I feel, okay, in 10 years, the acceptancy of wine will grow basically in India. And possibly those subsidies, whatever they are accounted for, they will be, even if they go away, they will be contributed by more sales or the more consumption basically in the coming time. So I look at from that angle in such a case. But from immediate perspective, I think Sheetalji, if you have an answer, you can please let us know on the subsidy part.
Thank you so much, Puneet. Yeah, just to add on a little more color onto that. See, recently they also had this notice of 120 crores of tax, the VAT refund. Okay. out of which, in fact, the Maharashtra government has put a stay on that. They are stating that because, see, it's very clear, any wine which is, any grapes which is grown in Maharashtra, produced in Maharashtra and exported from Maharashtra is supposed to be given a VAT subsidy. So currently also they have put a stay, which is a very positive news for the company. Going forward, yes, as there are political headwinds, obviously the government is bound to change. So we don't know whether it is really going to go away or not. So the answer to your first question is, we are not sure whether the policy is going to stay or no, but that's something which every company, not only Sula, has to deal with it. Point two, how are they going to tackle? If you actually look at their EBITDA margins, it's quite healthy. It's like 29.9%. So I'm sure going forward, it will be much better as well. If not better, it would remain the same as well. And I'm sure they will obviously look at increasing, the volume growth or the sales growth, penetration in various other markets to counter effect the VAT issue.
Sure, this is very, very helpful. Thank you.
Thank you.
Okay, so we'll stop here for the Sheetal's presentation. Any other questions? Please don't stop, put in the chat. So we'll answer it there itself on all the questions. So Sheetal, you can go back and check the chat on some of the questions. Like there could be farmer related issues, there could be weather related issues. Just put your thoughts on the answers on that front. And thanks a lot once again for your presentation. It's been good learning to me as well.
Thank you so much. And thank you each one of you for your time today, making it on a Saturday, on a weekend day to come and hear this out. Thank you so much.
Okay, you can stop sharing and then we'll move to the next presentation, Amar. Amar, you can hear me?
Yeah, I can. Can you see my screen, Puneet?
Yes.
Okay. So before I start dwelling into this, I'm going to be talking about Skipper Limited. I see like there are almost nearing 60 participants. So what I would like to is like have a quick question, and I would like people to answer on the chat. What are the sectors which are having tailwinds, which are part of the booming market in 2023? What are the different sectors which are contributing to that? If people can quickly answer on the chat, then I will start my presentation based on the response. That response is relevant to my presentation.
EV sector.
Yeah. Put it on the chat so that because we will not be able to.
Okay, so the answers started coming is EV, auto, defense, alcohol, power, hydrogen, AI, railways.
Nice. Jewelry, premiumization. I like it. Defense.
Green energy, infra.
Yeah. Fair enough. So I will come back to my
construction equipment. Yeah, please start.
Yeah. So I would like to start with this. Usually, like when I do the presentation, what is the product offering by the company is the third slide or so. But here, since I asked that question, what are the sectors which are booming? It's kind of relevant, and hence I would like to start my presentation with this particular slide. So we are talking about Skipper Limited. Skipper Limited has been in the industry for 40 plus years. So more than 4 decades rich experience, and the company, if it is there for 4 decades, it has been there for a reason for such long time, and it is going to be there. So that is the first checkbox which is ticked. And if you look at the product offering, it can be broadly classified into 3 different categories. First one is engineering, and then the infra, and then polymer. So what we have talked about, like if you look at some of the things which are coming here, what I'm trying to say is Skipper is in a way proxy to many of the booming sectors of 2023. Why do I say that? Because we see that it is into power transmission tower. In fact, it is India's largest T&D, transmission and distribution from infra perspective. So power, it's a proxy to infra, it's a proxy to the power. And then it also caters to railway structures. When I say railway structures, it is more into railway electrification, and then they also take EPC contracts over there. So when I look at this, power is there is a railway structures. They are also kind of getting into the water EPC now, which they have already executed one project. The way, if we look at the DNA of the Skipper Limited, what they do is when they are mature into one particular sector and offering, then they test their feet. And that is what they have done with the water treatment. They have taken one project, and in the latest earnings con call, the management has clearly said that they are not going to jump into that sector. They are just going to build up their expertise. They have done a pilot project, which is a full-fledged like paid project. And based on how the reaction is and what their learnings are, they are fine-tuned their approach. This will become more relevant if we look at the polymer segment, which is the third segment. They have been in polymer segment for some time, but it had not been contributing for XYZ reasons. They are majorly more focused onto the Eastern India, geographically speaking. But for the last 2 quarters, this polymer business has been kind of booming, and the returns are showing in the results. For example, if I talk about the last quarter, the revenue and the profit growth within the polymer, it was like almost 46%. I'll cover that in the approaching slide. So, like I said, all the sectors which have tailwinds, be it power, be it railways, be it telecom, infra itself, it's a Skipper Limited in a way, is like a proxy to infra also, right? So those are the things which are currently having the tailwind. Skipper, being proxy to all these sectors, obviously is going to bear the fruits down the line. So this is what I wanted to kind of clarify from this slide. Having said that, let me move to the next slide, and where we will briefly have like what is it about? What is the Skipper stock? On the left-hand side box, if you see, we talk about the segment revenue. It kind of like gives you what is the sector like where they are more focused on. Engineering is the bread and butter, where they kind of like erect transmission and distribution lines. They will make towers. In the telecom, they go for the monopoles and towers and other stuff. Polymer is obviously upcoming one. And when I say infra, that is more related to the EPC kind of contract, which roughly translates to around 12% of their revenue right now. I have just put it on the slide here, so I will not go through each of the numbers. If you just have a look at it, then I will move on to the next slide. I'll give 1 minute here. Moving on to the next slide.
Sorry, who are the promoters?
Sorry? Bansals.
Promoters.
Yeah, they are Bansals. Sajjan Bansal is the main one, and there are like 3 more people who are involved with him. But the chairman and all is Sajjan Bansal.
Okay, thank you.
Yeah. So when we talk about the engineering products, on the left-hand side, this export figure has been a bit skewed before the past year or so. And we know that is because of the macro news and the headwinds which we are having because of the Russia-Ukraine war and the developed countries like Europe and US kind of like getting into deflation. So that is kind of contributed to the noise. And prior to that, the COVID part, obviously. But if we look at the pipeline going forward and management commentary, what they want to do is domestic wise, like they want to have 50%, and export, they want to ramp it up to 50%. Why that will help, I'll cover more later in detail. But the moment you go to the export route, the margins like get notched up by 2-3%. So that will definitely contribute both to the bottom line and the top line. Within the order breakup, if you look at it, probably 3-4 years back, it was more and more of a T&D kind of focused company. But over a period of time and with the management focus on diversification, the non-T&D part of us also has come up very nicely, where now almost 26% is T&D, whereas non-T&D is coming almost to 50%. So 50% is T&D now, 50% is non-T&D. When I say non-T&D, that is where the telecom, railways, and other contracts come into play, along with the water EPC. So this is how, like, very broadly, 20,000 feet up level from, like, if we look at it, this is how the business is constructed for Skipper. I'll focus a bit on the polymer. When I talk about polymer business, what I would like to say is, like I said, about 2-3 quarters before, they had invested heavily onto it. They were not getting the appropriate returns because they were not getting the scaling up factor in the market and all. And that was becoming a drag on their balance sheet. Now, for the past 2-3 quarters, that things have been turning around. They are gaining more traction into the market. They are getting recognition. And this is where how the snapshot for the polymer business look at. When I say polymer business, basically they are into different kind of pipes. It will be UPVC pipes, it will be SPVC pipe, HDPE. All these things, they are different offerings catering to different business segments. So part of that will be safe. When I talk about like SPVC pipes, they will be more fit for drip irrigation and those kind of projects. Whereas if I go for HDPE, that will be more kind of like high temperature resistant and those kind of things. So they have different offerings for different kind of like pipes that will be used in the industry as well as in the home sector, building sector for the retails and all. Currently, their production capacity is almost like 60,000 TPA per annum, and they are more geographically focused on the East India, but then from there they have built up a network, and currently they have scaled it up to almost 30,000 plus retail sales touchpoint. So this has been part of the story where they have been investing in this sector consciously, part of the diversification plan, and now they are getting leverage into it, and that is where like one of the mental model, the operating leverage, now it is started showing up. When I say operating leverage as a mental model, what do I mean is, they have already done the bulk of the investment in this sector. They have built up the backbone infra and the logistics and everything. And now that the product has started getting acceptance into the market and all, from here on, with a minimal kind of spend, the sales can skyrocket. And they will start seeing the returns, multifold returns over there. That is what is happening in this particular sector. And again, like backed by this polymer sector, is also into the focus because of the government initiatives and all. We talk about housing for all, Nal Se Jal or Amrit project, for that mission, matter like Swachh Bharat mission. All these are contributing where the demand for this sector is going to go up, and we will see much more better things going forward. So moving on to the next slide, like I said, Sajjan Jindal is the promoter, and promoters have 72% stake, which is very healthy. And on top of that, there is 0 pledge percentage. They have not pledged any shares over there. From FFI, it is almost like 10% they have. And when we see others, it's mostly retail, but within that also, there are some high net investors who have like 2 to 3% stake. So if you look at it from a float perspective, retail or the public, they have only 50% of the whole stock, which can be a good thing. Why? Because 15% in the sense the availability of shares in the weaker hands. The weaker is a relatively, I'm saying it from a relative perspective, but then 15% means there is not much float into the market, and because of that, it can be good. It can in the bull time, it can be bad during the downtime. That is how we see it. So, but at this point of time, I will take it as a positive, and we go from there. Some of the HNI I have mentioned in the box, and that particular stakes at all. Ajay Upadhyaya, for a fact, I know that 1.3% that has been staked up to now like 1.7%. 0.4% the stake has gone up. If we look at it, the geographic reach of it, it's into about 50 plus odd countries across the globe. Like I said, it's a 4-decade-old company, and it has a good presence in Middle East. India, obviously, it is there, and neighboring countries like Nepal, Sri Lanka. They also have like some of the developing and developed countries. In Europe, they are into UK, Spain, Finland, and that is where the export percentage at one point of time was like in excess of 40%. Due to various reasons which I mentioned, now it is more near 25%, but management is very keen on ramping up the production export part again. In that management commentary, they have very clearly said that they would like to ramp it back to 50%. They are working towards it. And once that happens, that is where, like I said, the operating margins, it will start showing up in the operating margins, and that is where the bottom line and the top line grows up. So some of the locations we have seen over here. So coming back to, like, let's do a SWOT analysis on it. some of the things I have mentioned, I might not necessarily cover everything when I'm speaking. It's up there on the slide for you. From the strength perspective, like I said, it's a diversified business profile. Previously, they are in fact India's largest T&D line company, but that was their bread and butter, and was their identity. Over a period of time, with concerted effort from the management, they have managed to kind of diversify from T&D. Like I said, revenue now is 50% T&D, 50% non-T&D, and within that too, like they are going into different areas. Polymer is one upcoming area where they are getting major traction. Second thing is EPC contracts for like telecom business, for railways, for water treatment. If we look at the past actions of the management, they test the waters first. They kind of like get into a new area, spend some time over there. They are very cautious traders over there. Once they start getting insight into the industry, when they start executing, they have their learnings and there. And after that, they scale up. This is what has been shown up very clearly in the polymer business too. So, like I said, it was a drag for them because initial period, it is an investment period with minimal returns. They persevered through it and ramped up the business to such a point now that it has started contributing very healthily to the bottom line. And going forward, at least for the next 3-4 quarters, it can easily scale up to 2,000 crore market. When I say 2,000 crores, at this point of time, Skipper Limited has a market cap of around 2,000 crores, and their annual sales revenue is roughly around 2,100 to 2,400 crores. So, depending on the quarters, it might go 100 crore here or there, but roughly what is their market cap is their yearly revenue also. If we look at the management commentary, they have very clearly assured that the next 3 years, they are looking at 25% book growth. When they are looking for 25% book growth, basically what it translates is within 3 years, they want to double their market cap. So if it is 2,000 crores market cap currently, they have assured that they are on track to achieve 4,000 market cap in 3 years. That is what they are looking for. And that is what 25% CAGR growth translates to. Now, why are they so bullish, and how can they assure that in 3 years this is going to happen? One of the reasons is the China plus one syndrome. Within this commodity cycle kind of business also, there is a scope for that China plus one, where we look at like countries like South America, we look at Middle East and all. They want to cut down the dependency on the Chinese companies, and that is where the major contracts I have started coming over to Skipper in terms of like implementation of T&D line, in terms of like power infrastructure, and in terms of like 4G and 5G rollout. I see 4G because recently, last year, I think December 2022, BSNL gave an order of 2,750 crores to Skipper, where they want Skipper to kind of like do a EPC kind of contract where everything is kind of like EPC contract basically means all the solution, the wholesale solution will be outsourced to Skipper, and Skipper will take right from procurement to implementation. And this is in the remote parts of India now. This 2,750 crores contract given by BSNL to Skipper, it is for 5 years. Within 5 years, this has to be executed. But then the good thing is, after 5 years, there is a clause within it where O&M for the next 5 years comes to Skipper only. O&M is operation and maintenance. It's think of it like an AMC. So this is where things are getting rosier for the Skipper, where they do the initial part, they do the procurement, they do the execution part, they put in the infra at the back end. But then the AMC comes in as a kicker too, because that also gives me order visibility for longer years and also gives me annuity kind of returns, because I know this is fixed income which is going to come. So that is where Skipper is gaining very heavily onto it. So like I said, diversified business profile, experience management, and then some of the key strategic things which we have done. For example, like I said, most of the things, they are more focused onto the eastern part of India. Why is that a big plus? Because they are very near the port, the accessibility is there, the logistics gets taken care of it. Some of the system, if they look at it, it is back-end integrated. Like I said, they already were a leader in erecting the power transmission towers and all. Now the whole operation is integrated. When I say integrated, means right from the structure rolling to manufacturing, And then after that, doing like tower load testing and EPC, it becomes a one-stop shop. All the qualitative factors which we used to kind of like get outsourced to others, and based on that, we used to get different vendors. See, from a customer perspective, one-stop shop always works, right? Because they give outsource the solution, their project to a particular vendor, and it gets taken care of. That is what they have come up with, and that is their unique offering within the T&D also. So this is happening. And part of the backend integration, like I said, 90% of raw material requirement, hot rolled strips and structure, they are through captive sources only. If we look at the results for the past 3 years, annual net profits, they have been on the increase. In fact, 2023, the last 3 quarters, if you look at it, there has been a phenomenal rise in the stock price. And that is because of the underlying results in the background, where the results have been coming phenomenal. One of the reasons for that phenomenal results is some of the sectors which have been neglected before, they have suddenly come into focus, backed by the government. They have got the tailwinds now, like power sector, if you talk about it. Since transmission towers was the bread and butter, the moment power comes into play, skipper becomes a beneficiary. I already talked about their outlook for the next 3 years. We have guided 25% CAGR. Polymer business, it is growing fast. One of the way, means soft factors, if you look at it, means how it is getting acceptance into the market, why it is relevant. They have started hiring brand ambassadors, and we see more and more TV ads, right? Skipper Pipes, if you look at it, they have hired Mahendra Singh Dhoni and Chris Gayle. They are the brand ambassador. That kind of ad, at least it has a recall, in the sense that when you look at them, you know, like they are kind of related to Skipper, and the Skipper Limited managing to spend that kind of money means something is going good in the back end in the business. That is how I relate to it. Now coming to the weakness, we talked about the strength part. Weakness, since this is a more of a commodity play, it will be very kind of like cycle dependent. In the up cycle, it will do very good. In the down cycle, it will go into the doldrums. For example, last decade, if I talk about it from a power sector perspective, it was a lost decade, right? Means none of the power companies did good. Many of them had to shut shop. Why? Because for one reason or another, the demand was not there. And if the demand was there, it was mostly from the government, and the government, with their kind of like unanimous actions, they don't care, like in the sense that this is how the business runs or something like that. So they will come up with some autonomous kind of structures and all. Because of that, the last decade was very poor, and that is reflected if you look at the 10-year chart for Skipper. So I don't deny it's a commodity business. It's a cyclical in nature. But right now, that cyclical business has got tailwind. It is in the uptrend. And when it is in uptrend, and you can foresee that this is going to remain there for some time, power sector is now next decade, as per me at least, the way government has been acting, some of the changes they are bringing at the grassroots sector and all. And the fact that 2030, we have promised to the global stage that more than 50% of our energy needs, India's energy needs, will be provided by renewable energy. So from that perspective, if you look at it, the next decade is going to be very friendly to companies in this sector. And that is where it has got the tailwinds. But since it's a commodity business, the first weakness which I talk about it is going to be very working capital intensive. When I say working capital intensive, means they have to invest first. Because see, I'm just giving one example and thinking aloud over here. If somebody gives them a power project where they want to kind of like erect power transmission lines and all, the payment will come once the execution done. But at the end of the day, it's like a hardcore infra theme, right? You have to invest, you have to get the raw materials, you have to get the steels and everything. Erect this, get the project as a success, qualitatively pass it, then it gets approved, and then they get paid. So this whole cycle, it is very capital intensive. And because of that, if you look at the balance sheet, there is always going to be a pressure. Going forward, if looking at their order book and all, if they want to execute, they need money. Either means one way or another, they will need heavy money. It can be, the capex can be funded either by debt or by some other means. I'll talk about briefly in the coming slide. So that is where my second point is also related. Any deterioration in liquidity profile due to stress receivable and high inventory level. Now, why do I say stress receivable? Because that is the nature of the business. the receivable will come after a time. So there, if something goes wrong, then it will hit the company directly at the bottom line, where it can come in worst case scenario. It will be a worst case scenario. They might not able to make it. That can also happen. With Skipper, I'm not worried about that aspect because they have already spent 4 decades into the industry and still survived that. So there is a scope, but there is a risk also there. I'll come to the threat part at the bottom here. Mostly it's going to be a D2G business in the power sector or even in the telecom sector. Like I said, the last two big contracts which came Skipper's ways domestically. One was from BSNL for the telecom 4G rollout. The second one was from Power Grid. Both are like government businesses, right? And so this becomes more of a D2G business. And since it's a D2G business, they will be prone to like anything government can come up with as a new rule, new law suddenly, right? So there is a government change. And because of the government change, the strategy changes. That can harm them. Something they think like, okay, this is not going to happen. I'll give one live example. In the power sector itself, in the wind sector, government suddenly, like about 6-7 years back, they came up with a rule saying, no, it's not that way, that we will do a reverse auction kind of thing. There will be a cap, and within that, there will be a cap in the sense this is how much you can charge and all. That acted as a deterrent, and because of that 5 to 6 years, the whole wind sector went into a tailspin because that was not viable. If you spend like say 10 rupees, and if you are forced to sell it at like say 7 or 8 rupees, nobody will want to do that business, right? So some of these kind of decisions, they can happen. That is a big risk, and if it happens, we have to keep our eyes and ears open and act on it. So that will be one part of it. Negative cash flows I have already talked about because working capital intensive, and that is why the negative cash flow come into play. And because of that, how do you grow your business? You grow your business means after the sales coming to the bottom line, if your profit tax is there and then the cash flow is greater than that, it gives you opportunity to reinvest and grow. But if it is working capital intensive, the inventory days are more and all, then you are always looking for funding the capex via different means. Those different means in bull times, they can enable you, but something falters or the sector, the tailwinds, if they turn into headwinds, it can go downhill pretty quickly. We have to keep this one line in play when I talk about Skipper. Skipper, end of the day, is going to be a commodity play. It's a cyclical stock. So it is not your buy and hold forever stock. We need to monitor its quarterly results. Until the time the execution on the ground is good, management commentary is good, we remain invested. We think something is coming, throwing spanner in the works, we need to get out because cyclical plays are that way. Coming to the opportunity part, for a 2000 crore market cap company, they already have current order is in excess of 6,500 crores. In fact, like about last week, they got 585 crores of order, out of which 400 crores is in the T&D line from domestic and 120 crores order is from international. So the order books, like they are opening up like anything. For a 2000 market cap company, they are already having order in hand of 6,500 crores. And when I look at the pipeline, when I say pipeline, the projects they have bid on, they have almost like approaching 30,000 crores of bids are currently active. And it's a very 50-50% cut where like 6,000 plus crore percentage is for international projects and 6,000 crore plus projects are in domestic sector. So this bodes very well for Skipper. And that is where I get some kind of assurance when the management says that we are guiding for 25% CAGR for next 3 years. Ideally, I would have thought it as a tall order, but when I look at the current order book in hand and the current bidding pipeline, there is a feasible if all things align, which in a way are aligning. I'll move on to the next slide. This is become a kind of a crowded thing, but I wanted to highlight some of the things. These are all the notes which I have taken from earning con call transcript of Skipper for the past quarter and the quarter before. I have not gone before that because most of the things get covered here. Some of the things which I have highlighted over here will also dovetail to the strength of the company, which I mentioned before. Like what are the things which are aligning perfectly for the company for it to make the next jump and go for the higher growth. Correct? So this thing we already kind of discussed. Engineering it is up by 15. Polymer is up by 46%. So what is the mental model is in play here? This is the operating leverage, because now they have already invested into the polymer business for so long. They have aligned everything. They have got a dealer network in place. They know how to manufacture and looking at the order book. Now is the time where it gets encashed. Now the skipper pipes and other offerings of there in the polymer business, they have got a wide acceptance into the market. And from here on, with the minimal investment, because the fixed part of the investment has already been done. Now the only OPEX part they have to worry about, which will be the variable part, and they can encash it. So that is where we see that last quarter, this quarter, there is a growth of almost 46. So this is operating leverage which is coming into the polymer business. Export sales, they were, in spite of all the noise, the global turmoil, the different macro headwinds and all, they still managed to do a 132 crores of export. When I talk about quarterly, like I said, yearly sales for skipper is going to be around about 2,000 crores. Quarterly, if we look at it, it's roughly between 500 to 600 crores. That is where it fluctuates. So from 500 crores, if we are saying 132 crores is export itself, that's a good contribution because of, I say that because of all the prevalent noise. The moment some of the things subsides, for example, Russia-Ukraine kind of subside, the Hamas-Israel war kind of like subside, it might take some time, but eventually at some point of time it will go. And when it goes, deflation I'm not taking into account, because deflation, what happens? Even the end customer is going to look for like value for money, and they are going to go for a vendor who can provide a good ROI. And that is where India will play a big part. And within this sector, skipper will play a big part, because they are, from an execution perspective and other stuff, because of the our technical know-how or the manual labor, like which it is relatively cheaper when compared to the developed countries, right? Those all things get aligned up, and the cards kind of like stack up towards skipper there. So that is what it is coming over there. So exports is coming good over here. Like I said, polymer business volume growth is of 97%. This is what is contributing to the operating leverage. Something which you are selling in, say, like 100 or something, suddenly the sales of that particular sector with those offerings, they have doubled. And with the minimal kind of like reinvestment. They are also kind of diversifying into business of telecom, railway electrification. Water EPC, one project is already executed. They are kind of like taking slow approach over there, in the sense that once that is fully delivered and they get money for that, that is where the management said they would like to grow more into it. That is how they grew the polymer business. This is where I think is going to be the next growth, which is going to come from the telecom, 4G and 5G rollout, railway electrifications, and water EPC and drip irrigation business. This I already mentioned. Current bidding pipeline, now it has already approaching 13,500 crores, which is like almost 50% split between domestic and export. From geographical reach perspective, like during the quarter, we secured export order from countries of Egypt, Iraq, Bolivia, Australia, Nepal, and power grid, obviously. So that is where that geographical diversification comes into play. That shows like their reach. The other thing is the data mining aspect of it. In terms of need, in terms of like deflation and all, that is where they can do more and more business with the same clients. And that is bodes very well for them at this point of time. This I already mentioned, share on T&D and non-T&D is now almost 50-50, where like if we just go 3 years back, it was very skewed towards T&D business. China plus one, I have already talked about it. So this is what we are talking about. I will revisit this slide at the end when we are in some of the points in this slide, when we are come to the concluding slide. So here I have taken a stab at like doing a fundamental valuation of skipper. The way I'm going to proceed from here, this point onwards is I will first look at the fundamental analysis perspective. What is the things which can happen in skipper? In the coming 2 slides, I will be looking more from a technical analysis prism. So within the skipper, if you look at it here, the growth on the sales growth is like it's coming 13, 7, 15. And TTM is already 7. So if I take an average of 4 years, 11% I'm getting as a sales growth. Profit growth I'm getting as 12%. Currently, P is 50.5 in the past weeks carnage, it has come down like more towards 40, but that is where it is. So if you just look at it, PE might appear a bit high, but then we need to also look at the growth potential, and that is where we will come back again over here. So TTM EPS is 4.53, but I'm extrapolating it to the June quarter, it was 1.37. So just if I multiply it by 4 also, this will come to around 5.2 or 5.3 for the full year. I'm kind of ticking up by a fraction. I'm not still being conservative, looking at the growing potential and the management assurance that they will grow at 25% CAGR. I'm going to take it with a pinch of salt till the times the numbers start showing up in the book. So here sales growth I've still taken only 11%, what is statistically available to me. I'm not taking 25% as a base for my calculation. So full year EPS, if I say it is for 5.48, I kind of get fair price of around EPS multiplied by PE 275, roughly around that is where I get it. Correct? So 275, remember this figure. And now I move on to my technical analysis of the same. Within technical analysis, if you see, this is the first chart where I want to look at it. This is over a period of time from 2018 to 2023, about a 5-year chart. If you see here, there was a 4-year consolidation. This was the down cycle for the commodities, where it went nowhere. It is within this very narrow range. But then if you look at here at this point of time, it has Puneet, when I'm speaking, and are you guys seeing my cursor where I'm pointing and all?
Yes, I'm able to see.
Okay, cool. So at this point of time, it broke off this 4-year consolidation phase. And then you look at the volumes, relative volumes, like if you look at the other volumes and at this volume, the volumes were huge and it broke out. Once it broke out, it went up to a certain point. Then it retested the base. And after retesting the base, then it started its upward trajectory. So this was the first breakout, retesting of that particular base. And this support line which I have marked, this was the second breakout. And second breakout, look at the volume. The volumes are huge over here. And if you go forward, those are in green only. So from this, if you look at it, after this, it is on an upward trajectory. Some of the red marks which you'll see, like this is like not in company's control. These were the macro noise which were coming into play. So this is the first part which I'm looking at it. There is my support line, which is at about 150. Then there is resistance one line, which has been broken, successfully broken, and it is above that, which is more near 200. 250 also it has broached. All-time high, like if I look at the past 5 years, it is more around 275. And 275 is what I got in my fundamental analysis also. This is as per our analysis based on like our experience on the technical part and the fundamental analysis part. So if I look at it, 275 seems to be a good target for now, but this is considering things as normal. But like I said, there are things which are aligning for this company, which can propel it much higher. I'll come to that aspect of it. But before that, I will move on to the, and before I move away from this slide, if you look at this whole thing, can you see this? There is a cup and handle forming. In fact, there are two cup and handle forming over here. One is like the broad from this point of view. If you look at it, it will come this way, circular part, it will come here, and this is the handle which is forming. That is one of the most prominent breakout kind of chart in the technicals. Cup and handle, usually once it breaks out, there will be a spurt in it. The second cup and handle with which I look at is, I will not looking at the horizontal, I'm looking at this trend line, which is kind of, let me see if I can share my other screen to you, which is my trading view. Are you seeing my trading view screen, Puneet?
Not yet.
Do I need,
you have
so I need to stop and share again, is it?
Yeah, you have to escape this and then switch the share screen basically. When you press on your share screen, you will get that option to highlight on the trading window instead of presentation.
Okay, I got it now. Are you seeing it now?
Yes.
Okay. So these are the two cup and handles which I was talking about. One at the broader 5-year line, if you look at it, if I consider this support line at 245 as a baseline, from here it will come the orange curve if you look at it. And then the handle, I might be a bit early, bit premature, but the handle is still in the formation stage. But then it has been set up very nicely for completing that cup and handle. The second one, if you look at the purple one over here, this is from 2021. From there it started. This is another. This is the, how do I call it? It's not a straight trend line. It's a slanting one. Within there also there is a cup and handle forming. This bodes very well. Why I wanted to highlight this was cup and handle, one of the aggressive breakout in technical charts. And if it does sustain and the handle breaks out, the growth will be fast and furious. That is what like past experience tells us. I'll go back to my slide now. You see my old screen now?
Yes.
Okay. So I move on to my second part of the technical analysis. That was over a period of 5 years. This I am kind of like narrowing the range to the near term. And here we see the parallel channel. Again, when I look at the parallel channel also, everything is kind of like more in support of the growth which is going to come, because in the parallel channel, there is a midpoint dotted line which is being shown. And for the past few months, the price has been trending above it. In fact, it's kind of like touching the up channel of the parallel channel, which again bodes well, because the moment it decisively breaks it, that's another breakout and things can go up. And like I've highlighted over here in orange, this was the 5-year consolidation phase, this rectangular box. It broke it. It came to the, retested the support. And from there, it's a one-way upwards. It clearly shows that this particular stock, it is in stage 2 analysis right now. It is in a stage 2 spot. And stage 2, if the tailwinds align, if the company execution is doing good, the numbers are coming good, it will sustain for some time. And that is what kind of bodes well for the stock. Right? And below I have kind of like given, this is a RS with reference to CNX midcap. It is also kind of on the verge of breaking out that. Once it breaks out, it usually kind of jumps up quite a few distance in the past, like if we see the past instances also. And the volumes are good. The volumes are supporting it. And it's kind of like one way upwards traction, which I'm seeing right now. So having said that, we have seen the fundamental analysis part, we have seen the technical analysis part. I'll come to my concluding slide. So there, like I said, when I talk about mental models, what are those? They are like different terms which we kind of understand from an investor perspective, saying what are the things which are going good for the company, and because of which we can see a sustained growth. So sustained growth, it will come because in one part of the polymer business, we saw that operating leverage is the play over there. Second part is industry cycle, it is improving, be it the power sector, be it the railway sector, be it the telecom sector. So that is happening. Third thing is they are exploring new markets now. So new markets becomes another kick-in factor, because when it materializes, it gives flows directly to the bottom line and top line. And the better thing is, if you are more kind of like export oriented, it also gives you leverage on the operating margins. So those are the things which will come into play. What I'm trying to say over here is, here's a company which is having a 2,000 crore market cap. 3 times it is of the market cap, it already has orders in hand. It's excess of 6,000 crores. So 3 times so visibility already hai, order haath mein hai. They just need to execute it. So that is the first part. Pipeline is almost 13,500 crore, which 2,000 crore का market cap देखूंगा तो it is almost like 6 to 7 times that. उसमें से मेरा अगर 50% पे ट्रिकल होता है, ऑलरेडी मेरे पास 3x का ऑर्डर इन हैंड है और 2x 3x आता है, then I can understand why the management is so bullish and outright coming up. They are conservative management. If you look at the past calls, they are not one who will kind of boast. But here they are saying, yes, we are very assured. Next 3 years, 25% growth aa raha hai. In next 3 years, we are going to double our market cap from 2,000 crore to 4,000 crore. If that happens, then there is a chance that we will see a J-curve growth. J-curve growth is, if you have seen, it's an economic term. Basically, it's a hockey stick growth. Hockey stick growth में क्या होता है? It's like a hockey stick, and that is where it get its name from. Start slow होगा, शुरू में थोड़ा dip होगा, but then the other factors get aligned, tailwind comes in, and then there is a 45-degree kind of growth which persists for a long time. Have we seen that before? Yes, I've given some example over here. For example, in railways, the wagon makers, if we look at Tatagar, we will look at Jupiter wagons. They were also very deeply cyclical and neglected by the markets about like 1.5 years back. If you look at that, they were kind of like literally down into the doldrums. But then the order book started kicking in. Government started backing very aggressively. Government made railways as a focus. And suddenly the similar kind of story came up in Tatagar, where compared to its market cap, The order book suddenly grew up like 3-4 times. Pipeline grew up like 5-6 times. And you know what the stocks have done. That is what a J-curve growth can do it. I think Skipper Limited is at that point. It's at that inflection point. When I say inflection point, another term which I can use is the tipping point. Execution numbers start showing up and the stocks will run up. That is my thesis. That is how I look at this particular stock. Having said that, please remember my words. It is still a commodity play. Commodity play are cyclical business. And hence, if somebody likes this as a stock after that analysis and want to get into it, there will be cyclical growths are good till the time the growth is there. The moment the growth tapers, people have to exit without thinking too much because the fall can be equally severe. So that with that disclaimer, I think things are lining up for Skipper. I think this is something which we can definitely look into. With that, I kind of like come to end of my presentation. That was my presentation. Thank you all for listening to me patiently. I'm open for questions.
Thanks a lot, Amar. Yeah, we are open for questions. So one of the questions from the chat itself, Amar, is who are the peers basically? In polymer space, there are already some big players. And second is about have they planned to demerge their pipe business or listing it as a separate one because pipe companies are doing much better or commanding much better valuations as well.
Yeah. So pipe business at this point of time, I don't think the demerger is even in their vision right now. Why? Because it has just started getting traction. Their base is very low, right? That is where we are seeing 46% growth quarter on quarter. If we look at it, volume wise, it is coming 97%. So it has to attain a scale. That scale will be like probably like their market cap is currently 2,000 crore. I think management is, they have not referred to it in directly that many, but joining the dots, they have mentioned in one of their con calls that within coming few years, we want to have polymer business itself as a revenue of around 2,000 crores an hour. And when that happens, then the demerger thought will come into play. Right now, they are still nurturing and kind of in the phase where they will be bearing fruits for that. Okay. So that is down the line, not immediately.
Okay. So yeah, any other questions? Or else you can put in the chat, guys. So that would be good. So Amar, you can stop sharing. I will bring my screen up. We are already, I think, running late. So my presentation will go to 1:30, not now, so that we can have a break after 2.5 hours. Don't go away and come back at 1:30 definitely, because I would be talking about microcap. It would be not fair if I'm talking about something else apart from microcaps, right? So there would be an idea coming from microcap space. But before you leave for the lunch, it's an audience time to answer some questions. Basically, I hope you guys are able to see my screen. Just tell me yes or no if you're able to see it.
Yeah, we can see.
We are able to see.
Okay, so this is your time, and I've told you that 3 books are on offer for the day, and there are 2 questions in 3 segments basically. So this is the first segment in the morning session. So you will have 2 questions to answer. The person who gives correct answer to both the questions first in the line, he will get that one of the books. I have given you an example. For example, Alpha Learners Day is on which date? 28, 29, 30, 28 November. So answer in the chat you have to put as A. So that's how you are going to answer basically. You need not to put the full answer. Okay, this is 28th October or 29th. You have to just give that option in the answer A. So that's how you are going to answer it overall for the next 2 questions. So are you guys ready? Everybody understood what they need to do before we move to the questions? So there will be question 1 coming. You answer question 1 first, or you can type as question 1A, whatever it is. And then I will give you 2 minutes and then we'll move to the question number 2. That's how it is going to work. Yeah, Ganesh, you have some question?
No.
Okay. Okay, so here comes the first question to all of you. Be ready with your fastest fingers and put in the chat. What segment of business in HBL is for defense surveillance? Okay, so a lot of people have given the answer as A in the starting, but the answer is C. It's Tonbo. So we'll go back and check, but presenters should not be answering. At least give that chance to audience, okay? You should not be answering to your own presentations. Generally, answer is C. And out of the 10 people we are presenting today, we are not participating. Okay, the award is for audience. So we'll go back and check who has answered it correctly. Let's move on to the second question. Okay. Sula is famous for what? Giveaway, right? Giveaway. Amazing speed, guys. Wonderful. So we have those answers. I will just collate the answers and let you know who has replied to both the answers correctly and fastest as well. Okay. So audience time is over, and I hope you are loving the sessions. At least I am, for the depth of it. And I see the participants are almost consistently there. So that means presentations are engaging as well. So let's take a quick break, 45 minutes. Be back at 1:30 sharp, and I will start with my presentations. And before leaving, any questions by anyone, please let me know. Okay, so let's meet at 1:30, guys. Thanks a lot, Amar, Sheetal, and Saurabh for keeping us engaged for 2.5 hours. Wonderful.
Thanks all. See you guys. Bye.
Yeah, 1:30 will be back.